Welcome to this week's look at the state of the New York City real estate market. This is for the week of May 13th to the 19th. We're going to get started with the luxury market. Then we're going to talk about what happened in the Manhattan and the Brooklyn markets. Then I'm going to wrap it up, give you my thoughts and my recommendations. This will be especially useful to you if you are an active buyer or seller in this market. There were 30 contracts signed in the luxury market last week. That is 2 fewer than the previous week, but still a very good showing in the luxury market. Again, luxury in Manhattan starts for properties that are priced at $4 million and above. The number one contract for last week in the luxury market was West 27A at 500 West 18th Street. It was asking $17,915,000. It was raised from $15,500,000 when the condo, which was then known as XI, was first offered off of floor plans back in 2018. It subsequently landed in a quite spectacular $1 billion plus foreclosure and then went on to right itself and is now doing quite well. Because we've talked about this building many times before. It's often ended up in either the number one or the number two position. Anyway, this unit has almost 3,500 square feet. It includes 4 bedrooms, 4.5 bathrooms. It has a 34-foot great room, a 20-foot master suite, and another bedroom that overlook the Hudson River. By 2021, the XI was rebranded. It is now known as One Highline. It has a new sponsor, Witkoff, who took over the new construction, made some adjustments to the prices, and the amenities, which are offered via the adjacent Faena Hotel, which is part of this rebranded project, include a fitness center, a 75-foot lap pool, spa treatment rooms, golf simulator, children's playroom, private dining, games lounge, and a garage. The number 2 contract was 5B at 50 Crosby Street. It was asking just under $11 million. It was reduced from $11,250,000 when it was listed in April of 2023. It is a condo. It has 12-foot ceilings and 4,164 square feet. This has 3 bedrooms, a library, screening room, and 3 bathrooms. It is part of a 13-unit building. It is a loft building. It has a 24-hour doorman and a full-time super. Quite a nice building, lovely boutique building. Anyway, congratulations to the number 1 and number 2 sellers and buyers for last week. The total weekly asking price sales volume for last week, $207,890,000. Average asking price, $6,929,667. Median asking price, $6,397,500. Average discount from original ask to last asking price, 12%. Average days on market, 859. That's it for the luxury market for last week. Any questions, please post them below or reach out to me directly at Sotheby's. We're going to take a look now at what happened last week in Manhattan. 444 properties came on the market last week. That is up almost 15%. 233 contracts were signed. That's up just a little bit over 3%. And the off-market properties rose over 40%, 167. The supply rose 1,837 for the month. That is down almost 10%. Contracts signed also down a little over 9%, 949. Off-market properties up for the month, a little over 23%, 557. Where does that leave us in terms of the market pulse for Manhattan? Well, we see we are kind of drifting down into buyer's territory. Again, this is really an indicator, this market pulse, between the balance of supply and demand. If we take a look at the liquidity pace chart, 949 contracts signed in the last 30 days in Manhattan, we see we're kind of in this neutral market in terms of liquidity. We would expect this time of year to see something more like 1,100 contracts signed. However, we are in this kind of sluggish spring market, so we're really not seeing that. This is an interesting chart, this 30-day listing success rate for Manhattan. This is a look at the percentage of listings in Manhattan with signed deals in less than 30 days. And it shows we are in this market that is kind of stuck in neutral, as we have been for quite a while. We had hoped for a more robust spring market in Manhattan, but we're really not seeing that. It's not a terrible market. We had a nice recovery from the end of 23, but are we having that very bouncy, lively spring market that we had hoped for? No, we are not. So as we are heading into, we're in mid-May now, heading into the end of May. So could we see a rally at the end of the spring market? We could. We can always hope. That's it for Manhattan. We're going to take a look now at what's been happening in Brooklyn. We see a bit of an uptick in supply for last week in Brooklyn, 246. That's up a little over 9%. Contracts signed, kind of a wash, 150 contracts signed. Off market up 69, up a little over 35%. The supply for the month in Brooklyn is down about 9%, 947. Contracts signed also down almost 3%, 621. Off market rose over 44%, 283. 283 came off the market. If we look at the market pulse in Brooklyn, the market overall in Brooklyn seems just a little more neutral, let's call it that, faring a little bit better from a balance standpoint than Manhattan. We remain in this more neutral state because the supply and the demand remain relatively in balance. The liquidity pace for the last 30 days, 621. Again, neutral, but you can see it's kind of up a little bit there at the tail end. If we look at this Brooklyn 30-day listing success rate, the percentage of listings in Brooklyn with signed deals in less than 30 days shows a healthy demand behind the scenes, with well-priced units continuing to move. Again, Brooklyn is outperforming Manhattan. Neither market are particularly robust. However, if you had to compare the two side by side, which is what we're doing, Brooklyn is doing a bit better than Manhattan. Could well have to do with there's more demand than supply. We just haven't had a lot of supply in Brooklyn, and definitely the buyers are absorbing the supply as it's coming on the market. Okay, that's it for Brooklyn. I'm going to sum this up now. So we're going to move on and we're going to talk about the market kind of in total. And I'm going to give you my thoughts as we find ourselves kind of moving towards the end of the spring market. And I'm going to give you my thoughts, my recommendations. If you're an active buyer or seller, you're definitely going to want to stick around for this. So there were 30 contracts signed in the luxury market. These are for properties that are priced at $4 million and above. That is 2 fewer than the previous week. 4 of these were in the trophy category, meaning they were priced at $10 million and above. And perhaps notable, 13 of these were in the new development category, meaning they were sponsor sales, might be telling about what the appetite of buyers is these days. Condos really outperformed every other category this week. 23 of these properties were condos, 4 were co-ops, and 3 were townhouses. And it was a split. 15 were uptown and 15 were downtown. As far as the other market conditions, kind of the general market conditions in Manhattan and Brooklyn, we could continue to call these neutral conditions. This has been a bit of a sleepy spring market. We started out stronger than where we find ourselves now. February was quite good. March, April were a bit sluggish, and we don't really quite know where we are yet for May, but it continues to feel the same for those of us out there working and dealing with buyers and sellers. The conditions do feel quite the same as they have been feeling over these last couple of months. So what we're seeing is that our inventory in Manhattan is at about 7,400. We'll probably reach about 7,500 by the time we get to June, and then probably not see a lot more inventory coming on until the fall. The Brooklyn inventory did see a little bit of a pop, so it looks like we could be seeing a little more inventory coming on the market for Brooklyn. That might mean that we're going to start seeing a little more froth in the Brooklyn market, but we'll have to wait and see on that. With regard to contracts signed in Manhattan, we're kind of moving sideways. We are in the 900s. We should be in the 1100s. As I mentioned, 10% of the Manhattan sale units in April signed a contract in 30 days. So we know this is a very price sensitive market. In Brooklyn, we see that it's a very stable market when it comes to contracts being signed, doing a bit better than in Manhattan, a little more demand. And 19% of the Brooklyn sale units in April signed a contract in less than 30 days. So it's looking like the well-priced units in Brooklyn are doing a bit better, and those are being absorbed a little more quickly. So what does this all mean? If you're a seller, we see the Manhattan liquidity going sideways. We see the Brooklyn liquidity doing better than Manhattan. We may be kind of running out of runway, though, here with the summer months just ahead. And you should be very, very careful with your asking price. If you are hoping to get your deal done in the spring market, you should be making adjustments now. If you need to make adjustments to your asking price, do not hesitate. If you're a buyer, you could be seeing some new opportunities here. If you see a property that's been on the market for a while, you may have more play, you may have more leverage. As we head into the summer, you may find you have less competition. Once we get past the spring and we're into June, July, and August, you may find that those sellers who are still on the market are really ready to get their deal done. So while there could very well be some new opportunities, especially once we get into the summer, I think it is important to say that the data that we're seeing right now, even though the deal volume overall is lower, we're really not seeing the prices being terribly affected by this. We saw some nice recovery from last year in the prices, and we're really not seeing any data coming in that suggests that we're losing ground on the prices. Just something to think about if you're a buyer, and something to know if you're a seller. But sellers, as I said, be careful about your asking price. You want to be positioned as the best looking thing out there in your class, and buyers, be aware of that when you're making offers. If you go too low, then sellers are not going to want to engage with you, and you likely won't be successful. They won't want to counter your offer. Okay, that is it for this week's look at the state of the New York City real estate market. Any questions, please post them below or reach out to me directly at Sotheby's. As always, my thanks to Urban Digs and the Ulshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.